10-year note yield saw a bit of a decline one day before the Fed announcement comes out and the expected 25 basis point rate cut that comes with it, and the expected forward guidance and a press conference. So we'll get to hear from Chairman Powell himself. At this point, the market is very much focused on where the Fed is going to take us after tomorrow. Tomorrow is pretty much a done deal. Is going to be QE? Is there going to be some kind of bond buying? Is there going to be some kind of balance sheet adjustment? All that is very much uncertain, I think, at this point. Yes, the market expects some kind of announcement, some kind of easing, some kind of dovish tone, but what comes after that, I think, for the next 3 months, taking us out towards year end, is still very much uncertain. And if you look at the range we've had roughly a 50 basis point range 10-year note yields over the last month, and we are still hanging at the high end of that. So while we did see a major position shift, a lot of longs getting out, we saw the yields kind of creep higher very quickly. I think at this point, a lot of that can change after tomorrow. Obviously, you still have to keep an eye on China and U.S. trade. Obviously, there's a lot of geopolitical risks rising in the Middle East. Obviously, there's a lot going on with other global central banks that could have a hand in this. But at this point, if we're just looking at the U.S. market, the economics, and the Fed, a lot will get resolved tomorrow, but certainly not everything. And if you look at implied volatility, yes, it did catch quite a bit today, but a lot of that wasn't due to the Fed. A lot of short-term dollar stresses had overnight repo rates skyrocketing. You had a lot of head scratching, figuring out, the Fed effective settled higher, opened higher. The repo rates were all marked higher. A lot of scarcity in the dollar market causing a lot of maybe short-term panic. And the Fed did finally step in. But at this point, tomorrow's meeting and the expected rate cut had very little to do with that at this point. So right now, you've got sort of a short-end stressful moment going on against what's going to happen tomorrow. And what will really happen tomorrow? Well, the Fed's going to cut 25 basis points. Market's expecting another to follow sometime later before the end of the year. But what's really going to be the key is the forward guidance, not only in the economic data, but how much is the Fed willing to step in when it's needed, whether they're going to adjust the balance sheet, whether they're going to add more QE. If you look at what's happening at some of the other global central banks, they are being more aggressive. And likewise, that is not something the Fed wants to do, but will they be forced to? Remember the old adage, the Fed raises rates when they want to and they cut rates when they have to. And this, again, could be one of those have-to moments. So 10-year note yields hovering at about 180, still shy of that benchmark 2%, but a lot of that's going to change tomorrow when we get the bigger macro picture and forward guidance from the Fed.